All right, welcome back to the stream. This is another video covering deep charts, specifically backtesting. And today we're going to be backtesting the February 4th, 2026 New York session. Just to recap, this platform is called Deepcharts. You can find it at deepcharts.com. And we're just going to turn some things off for a moment, and then we'll go through and talk about what everything is before we start the backtesting. So I really love the backtesting feature. I've used a lot of different backtesting programs. TradingView's backtester, not a big fan of it, to be honest. There's a couple more online services. I don't even remember the names, to be honest with you. I've done some things in, I believe, Quantower, Atos as well, which I liked a little bit. But Deepchart's still a little buggy in some areas, but overall, I'm very happy with it. I like to use it both for charting and for real-time trading in the futures. And right now I'm using a 40 range chart on NASDAQ. It's displaying a 10-day tick by tick range, 40 bars. You can see the days highlighted in white where the days start here. We are on the ETH. So we're showing all of the price action. And we could just do RTH, which kind of changes some things. But for cleanliness, and we're trading RTH, my levels are specified off of ETH, but we're going to kind of hang out in the RTH view just a little bit cleaner, and that's how we're going to do it. So price is going to open up at 9:30. We're going to do 1x speed to start, and the bars are going to move pretty quick because it's a 40 range chart. The different indicators that I have, so essentially I've marked some levels. Actually, we'll go back to ETH for now. I've marked some levels here that I think are interesting. Now, if we look at these levels, not necessarily paying attention to these higher levels right now, these more immediate levels in this range that we're currently working in. Here's what I see. This range is kind of interesting because it looks like we just ripped through it, right? So it's a big imbalance. We're going to add in the daily volume profile so we can see exactly, I believe that's it, what's going on. So we have volume, 70% of the traded volume in the orange range. We also have it showing aggressive buying and selling delta. So some of these ranges are where we had a response. Like if we look at this particular line right here, you can see there is, it's probably hard to see, but let me zoom in a little bit. We had strong aggressive selling pressure at this line, and this aggressive selling here was just as large, or if not larger, than any other node in this entire range. Now, obviously we have a couple things up here clouding our view, and let's just do it this way. This might even be better. I'm just going to delete the drawings out because I have no problem starting from scratch. So we're going to delete all the drawings out. And then we're even going to go as far as, just to get rid of some noise so we can see better, we're going to remove price from the chart. So now all we see is the volume profile. Okay, so I will add the important levels indicator back on, because then we're going to be able to see some important levels that have happened on the daily, such as midpoint, low, high, open, close, point of control, value area, VWAP, And we can do same thing for the weekly, and there's a few different options available for the monthly. And we'll add that in. So now I have some important levels, such as the weekly value area high. And actually there's a couple levels stacked here, so the text is on top of each other. So daily, day -1 open, weekly point of control, etc., etc. Okay, so a couple things by this zone I was referring to. That's also a VWAP and a high volume node on a previous profile and a POC. So this was a previous POC level, and it's near a previous VWAP level. So we had lots of selling volume step in right there. So we're just gonna mark that level right there. So that's how I got that level. Okay. At the top here, we can see there was a lot of aggressive buying at the top, but passive sellers essentially, it looks like it got exhausted up here at the top, but passive sellers just denied, right? And then we had a huge selling move down. So we're gonna mark this area right here because that's where we got rejected. And we can expect then when we return, we can even move it down a little bit to this high volume peak. Sometimes it's hard to catch these little areas. Plus I'm blind. So that's another area. You know, you'll find them everywhere, but we're just gonna mark some intermediate ones that are kind of important. From this previous day, which was significant, we had significant trading, especially in comparison to the following day here. Let's mark this value area low, and looks like sellers got result right here. So we'll just mark the whole area. All right, and this is the weekly low. So, you know, we could take that weekly low out too. And then this dotted orange line is where price is currently trading before the New York session open. And then we have this point of control with lots of volume. So this area right here is the money area. This is where lots of shit happened right here. We'll call it. And that's going to be a no trade zone for me. But I am looking for it to reject and maybe move back down towards the bottom. So if we reject from this area, if we fail to accept higher prices, I would likely take a move away from there. Well, actually, just to get a rejection from right here to this low volume node. And if we can get above this zone, I wouldn't be opposed to taking a long up all the way to the top. But I would expect that this might be an area where we have some resistance. So maybe it's a little scalp op. If we come up here, maybe take one off here, move stop to break even, take another one up here. So that's just some ideas, right? Some ideas to look at. Those look like the most relevant and important areas for me. There could be others. They may not be valid anymore, but at the end of the day, this value area high, this zone right here could be a rejection zone to come back down to the bottom as well. So that would be another 2 contract move where we take one off at the point of control and close it out at the bottom here at the value area low the previous day. But I would expect that we're going to test one of these extremes. So my guess is maybe we test the low the previous day before coming back up and repairing. Point of control did move down for multiple days. This was an inside day here. So we could still have more consolidation and just bounce back and forth between the value area high and the value area low. So we'll see. So that's the first indicator. So we're going to go ahead and get rid of that indicator. And we'll also get rid of the levels indicator for now. And then we'll put our price back. So these are 40 range tick bars. So every 40 ticks of price movement in any direction, it could go back and forth, 20 up, 20 down, 20 up. But once it goes 41 ticks, it creates a new bar. And another thing about these candles, as I've mentioned in a previous video, is they're volume-based candles. So the more volume that was traded in that 40 ticks, it's going to have a fatter width. And the color of the candle is going to be based on the aggressive buying or selling pressure. So you could have a purple candle that actually moved up. In a traditional candle chart, you're going to see when price makes a higher high in the candle, it's going to be generally green. And when it makes lower prices and closes lower, it's going to be red, or in this case, purple. You can also see that the color of the candles is shaded. So more volume plus more aggressive selling pressure to push the price down, met by lots of volume and aggressive buying pressure to push the price back up. Price gets rejected pretty hard with heavy volume, lots of aggressive buying, and it moves back down. Not quite as an aggressive of a move, but not as many sellers present. Looks like right here sellers start to lose. We lose both volume and intensity. Before we move back up, sellers attempt to step in, but with heavy volume, buyers push the price back up. Before we tap into this, where price is now, reject, come back up, lots of volume traded at the end of the day, and we end where price is currently. And it looks to be in a fairly volume zone or balance zone. So there we have it. So now we kind of have our areas to look for. We could rip through this zone to the top, or we could bounce and reject it and come back down. So these two boundaries are the first area I'm looking for a trade from. Okay, next indicators. So if we go back into all of the indicators, We're going to add our deep trades indicator. And it shows two things. First thing it shows are these lines that are zones. And you're going to see some circles there as well. Not necessarily. Generally, you're going to see circles there. And the deep trade shows the aggressive buying and selling happening from one entity in a very short period of time. So it aggregates all of the contracts that that entity bought or sold aggressively and prints a circle. And if you really zoom in, you can see the number 2. But the smaller the circles would be, in this case, for NQ 60 contracts aggregated per bubble. And then the larger ones can be up to 7 times that. So this, you can see right here, this was 71 and this was 33. Okay, so first thing that's a problem. We want it to be 60, not 30. And then let's make sure, yeah, our sizing is proper. So those are areas where big players stepped in. And you can see that that's why price likely reversed. Large contracts aggregated, stepped in, big volume candle, price moved up. And we could expect that if price comes back down to this level, these buyers may try to protect that level right here. So that could be another area to see if we reject off of. All right, so now we start to look at some more fine-tuned key areas. Over here we had some absorption. So we had a small, probably 60, 70 contract bubble. What's that, 60? Get absorbed. And then we work our way back up to it. And break through it. So those buyers were no longer there. So I would say this kind of looks like an exhaustion move up here where it just ran out of steam. Didn't have any real big players or anything happen there. So there was just no more interest here. Didn't continue to push price up. Volume was pretty low and just steadily kind of sold off a little bit. More aggressive selling pressure on the way back down. And buyers stepped in right here again. So this area right here is kind of, we want to kind of break through this zone. So this might be a no trade area for me. But an area to pay attention. All right, so let's continue to add our indicators. Next indicator is composite profile. This is based off composite volume. And it's going to base it off the entire chart, so 10 days. Composite. And it'll just put us in a profile. And interestingly enough, this is also the value area low for the 10 days. So we're fighting to push back into the 10-day value area. So yeah, this is a no trade zone. You can kind of see there's lots of volume being traded. These peaks, these red are high trade volume areas. There's 3 of them there. Price, yeah, we want to break through that before we take a position. If we reject it, we could take a position back down to the bottom. But this just gives us some more context on more of a medium term or long term basis if you consider 10 days long term. And you can see where the value areas are here. We have this area of interest and this high volume node area of interest and this other high volume node, as well as here and here. So everything kind of makes sense, right? Hopefully you can see that. And then we're going to add this deep M effort. This is going to show us areas where effort was used to push the price up, and it's for scalping, and it's really designed for this 40 range chart. So it's a very specific indicator, and it needs to be applied in a certain way. Come back to our important levels. It gets a little busy. All right, we can see we have some important levels here, some important levels here, some important levels down here, and at the bottom as well. So all of our levels line up with some of the important levels. I'm just going to remove it because it's just really busy. And then this deep IVM is going to show us the initial balance, some stuff. I'll talk more about that when we start the back testing. And lastly, this is a delta volume profile with delta, and this is a daily profile. So if we really wanted to zoom out, we already showed that at the beginning. We can kind of see, I think we have like 5 days of it set up or something. We can kind of get a bigger picture of how price moved. All right, so we were up, we kind of shifted the point of control down. I expect us to likely make a move back up to a prior area of value, which is, I'm thinking my bias is long to up here to retest this value area where we spent a great deal of time. We may sweep this low before we do that. So it'd be awesome to find an entry down here. And I think that's it. Maybe, well, let's see, do we have anything else? We do. Speed of tape. This is going to show us how fast the tape is moving. Obviously, if it's up here, it's moving pretty quick, and we're currently at pre-market, so this is just marking the last like 3 candles here. So just to make some connections to that before we start the actual back testing, you can see that it's a high volume candle here. And you can see the speed. Once these lower, you'll see there's some standard deviation lines here. So now we're ready. So we're not going to do anything for the first few minutes. We're just going to let price tell us and help allow us to find a direction. And my general bias at the moment is up after we settle. So we're looking to go up. And we're going to put on 1x and let's start it. Okay, so you'll see the speed of tape moving pretty quick over here. And our first initial move is down. So we're still in the first minute. So it's kind of deceiving because the bars print so fast, right? So every 40 ticks of movement. So it's every 4 points. Or 10 points. So we printed a zone. If it wasn't so early in the session, I would likely take it. But this showing that there is quite a bit of selling effort to move the price down for this swing. And what it's saying is if price comes back to this zone, it's likely that we're going to continue to push down. Same thing here. We left the zone, we tap back into it, and it's continuing to push down. So now we're reaching the area that we want to start paying attention. We're only 1 minute into the session, and we've had a 123-point move. Insane. So now we're starting to print a little bit of consolidation before another leg down. For context, we can zoom out so we can kind of see where we're at on a higher time frame basis. So this 50% area is interesting. A lot of times, well, I don't have it marked out the way I normally have it marked out, but I could see a reaction back up to the top of this red area once we hit around 50-70% of this zone. Looks like a lot of buying effort is happening. We're still only 3 minutes into the session. So now we have a zone print. We actually tapped back into it, but we missed it because it happened so fast. Did not give us time. However, we could come back, right? So now I have my bias. I'm actually bullish here. So we're gonna pause this for 1 second. So now I saw exactly what I wanted to see happen based off my pre-market analysis. All right, and now we're gonna try to hold this position for a while. So it's NQ, and where do I think it's gonna go? Well, the first place I think it's gonna go is probably back to this value area low, or this high volume node on the previous day profile, which is almost my target, the IBVI, basically back to where we opened, right? That was going to be my target. So I'm going to enter 2 contracts. Normally I would do this on MNQ. I'm still looking at the NQ price action. I would always have the enter on MNQ, and I would have my NQ chart, and I'm doing everything on NQ chart. But I'm going to enter 2 contracts. We're going to take one off here at the previous day value area low, and then we're going to move our stop to break even and try to see if we can make it up to this initial balance high. So now we expect once we test that to come back down and retrace, and we'd likely have another entry to take it back up again. Or we could just hold it and go for a home run, and if it's not a range day, maybe we break the initial balance high and work our way all the way up to the previous day initial balance high where value was established, maybe up to this point of control here. So that being said, we're going to go 2 contracts, put a limit order in right here. Obviously in real time, you have to do this super fast. Put stop loss behind the zone. Technically, I can probably put it right here. That's $1,700 of risk. Well, we'll put our take profit right there for 4,140. Obviously, like I said, I'm going to put 1 sell order here. But for now, We'll just leave it like this. And we'll enter. Now I'm going to speed the time up a little bit. We get filled already. And technically this is not the best because our zone just got ripped through. But the second zone is holding. So we took a little heat on that. Now we had some selling effort up here, which may indicate that we're actually going to go lower. So that's one of the issues with entering so earlier in the day. It's not really clear on the direction. So if we get a big rejection from this area right here, we're likely probably going to get stopped out. However, we break through that zone and continue. Maybe we'll get that retest. A new zone was created. We still have our stop protected. And we'll put our limit sell 1 here. We'll switch this off. Put our limit sell 2 here. And we'll just see what happens. We're still having a hard time breaking through this zone, but it looks promising. We're making higher highs and higher lows. We even take it back to here. So it can't be that easy, right? Well, it's not. It's not that easy. So now we move our stop to break even or a little bit higher. Actually had it too high. It was supposed to be there, so we would have hit it, right? So that's funny. So that was just a mistake on the placement. And we get that retracement back down that I was talking about. So we should have been out here looking for another entry back up. And this is like real time. So it moves pretty quick with the 40 range chart. You can really see the structure and it's really good for scalping. And even though I made a mistake, I'm not going to give away all those profits. So we're going to move our stop behind this swing. And it looks like we still have some effort to the upside. But I'm not going to give up that profit. We can always re-enter. So that's a $1,400 trade, even making a mistake. Obviously, we could come back to this trend line, which is also point of control. For a retest, I would really look to re-enter down here. We're going to market smash it if we see some aggressive buyers step in or some sellers get absorbed, and we're going to market smash right there. We saw some aggressive motion. We're going to put our stop loss behind the POC, and our profit is going to be back at this area where we set it up before. Price taps back into our effort zone. And looks like we're starting to create a nice upward trend. Made a lower high here. Could be a fake out or a flip back to the downside. We're going to trust our analysis. It's a little bit of consolidation. So we're 39 minutes in. A little bit of a battle, but the buyers win and continue to drive the price up. One more push above this swing, and we're going to move our stop up behind this swing. A lot of consolidation right now. Could very well get stopped out in profit here, and we did. And we're sitting on our hands at the moment. We get another aggressive push up here from the POC. It looks like a lot of selling pressure though. We might market smash back in again and try this a second time. So right there. So we had some aggression, a little pullback. Price continues up and price is moving fast. We can actually move our, we're going to make sure we stay in profit here. And we just missed our TP. Just fall short. But it's trying. But we're free rolling, right? We could take our profit right now. We could take our $500 and run, or we could go for the plan. And we're gonna stick with the plan, all right? Because we're gonna. This is a very strong zone that looks like it's being protected pretty well. We still have aggressive buyers pushing. And we're going to get some resistance up here that we need to break through. It's going to be the test when we move it up to behind the stop. This looks like a strong protection zone. And we take our profit and we expect to see some resistance at that zone. Do we want to continue upward? I don't know. So a couple things here. We're at the value area low on the composite. We have some high volume nodes up here. We've got a lot of volume being traded at the top here. So I really want to see us break through this zone here before making another move to the top. And I'm going to get rid of a couple of these indicators. But likely my day would be done right there. I'm out. We're going to get rid of this composite profile and this profile right here. So everything is working according to my pre-market analysis, which is awesome. And I attribute it a lot just to be able to understand how to put some information down on the chart, and then anticipate where the market's going by framing the daily profiles, and then by figuring out some levels where we're most likely to get the biggest reaction, and then finding the no trade zones to stay away from, and just having a little bit of fun with it, and just making sure you're protected behind areas where a big player stepped in and where there was a lot of a aggressive push or effort to move the price away from that area. And that's pretty much it. So it's gonna be a shorter video because I'd probably be done for the day. I mean, $2,900 day, that's pretty good. I'm happy with that. If obviously anything could have happened, but I'm gonna speed it up. We're gonna take this through till the 12 p.m. lunch hour. Let's make a little assumptions here, and let's just kind of speculate. Obviously, not taking any actions, but what I would expect is that we either revert all the way back down to the bottom, or maybe to the top of this area right here before making another move up, or we just start to ping pong back and forth inside of this range. So our initial balance is essentially right here. In the first, we're still in the, it's 9:43, so we're still in the first 15 minutes of the market. So 15 minutes trading, $2,900 done for the day, right? Obviously we could trade longer. There's going to be more setups, but just that took a lot of energy. That took a lot of brain work. I need some coffee. At that point, I need to get some breakfast. Need to go check X to make sure the world's still coming to an end very soon. And other than that, that's how I use Deepcharts. So hopefully you found this informative, and maybe you got a chunk or a little bit of knowledge from the video. Maybe how to frame your bias, maybe how to identify levels using volume profile and aggressive delta, maybe learned a little bit of how the Deepcharts platform worked in case you want to explore it. But backtesting creates confidence, and having the right information creates confidence. So to me, it takes the guesswork out. 100%. Gives us the best chance to make the most high probability decision, and also protect us because it gives us the levels that we need to have our stop, and there's no negotiation. If that level breaks, you're wrong, or something happened to move it in the opposite direction. So let's speed it up. I'm anticipating, we're right in the middle of the range here. I'm anticipating a range day today. Now that I see what's happened over the first 15 minutes, we're below 50% of the range. Maybe it breaks to one side, but we had a pretty, let's see, this initial extension was 161 points. It has some room to we have some room to 247. Looking at the averages, we definitely can make it back up here to this gray zone where if I had a bias, it would be long up to this 25,500 range, more so than down to break this low at 25,180. So we're going to speed it up and let's see what happens. So we'll go 40x time. So we do tap back into the zone. And we sweep the low. And we move lower. So now do we make the move all the way back up to the top? So we just set the initial balance. Or no, we haven't. It's not even 10:30 yet. So we're still in the initial balance. So now our initial balance is fairly large. It is 266.5 points. So at this point, I expect us to range. But that's a move, right? We sweep the lows, move back up. This is where I might draw from the initial balance, I might draw a custom volume profile. And obviously this is like 40x speed, right? But here's what's interesting. You can really see we're spending a lot of time in this zone. That's where the value is being created a little bit lower. And now we broke the initial balance low. It's interesting. Up on the left with the IBVR indicator, it says the bias is down. So it's an algorithm and a single breakout 47% of the time. We could still break out to the top as well. But 40% of the top, 7% of the time, it's a single breakout. And the bias is lower. And it prints a couple different levels. So this would be the area that it would expect to at least move down to for the day, with an average extension when we have an initial balance breakout to the bottom, an extension level. And then it has another standard deviation where if we break the extension average, we could move on average all the way down to 24,500-ish. Oh, coffee time. So you can put these swing volume profiles, lots of aggressive selling. So and that, my friends, is why you don't blindly enter trades. You create a bias, but you're not married to it, and you wait for information and effort to happen to help guide you to take the trade in the right direction. So that's absolutely crazy, right? A lot of it is timing and just right time, right place. So we break back into the the protection level. So we extended at least to the protection level. This is an area where I would think that we might start to revert back up to the opposite side, or at least to the middle. So if we had some green effort zones print here, obviously I'm not going to take it. I already made my money for the day. I'm out. I would likely take a trade back up to the top. And I'm not looking for a small effort zone. I'm looking for a big green rectangle effort zone. So now we're moving down towards the standard extension average. So we could expect to see a effort here, back up to the top, or at least to the value area low. So that range is a little bit stronger. Here's where I might actually think about taking a move back up to the top, but I want to see a couple higher highs get printed and a couple green zones. Okay, now I like what I'm seeing here. If I was doing this in real time, I'm likely taking a move back up to the top here, and with a profit target of the protection zone with a stop behind the extension average. So information is the key. Now I feel really good, right? And I'd be moving my stop up. And very careful down here and moving my stop up again. But we still see aggression. So, and we get stopped out. Just a little too tight on the stop. Let's see if it would have played out if I just wasn't so risk averse. Looks pretty promising. Yeah, it kind of looks like a little bit very low volume here. Kind of more of an exhaustion. And we would have hit the target if we would have just taken that trade. But again, we're done for the day. And it is now 2:24 New York, or excuse me, New York time. So we're approaching the end of the day. And we returned to about 50%. What zone next? Right here. That's going to be our zone. Just remove some of this clutter. Wouldn't be surprised if we finish around here. Looks like it would have been a good trading day though. And essentially right back to it. At 4:39. So that's crazy, right? So I'll leave you all with that. Pretty goddamn fun. So I highly recommend y'all find your own way. Don't copy trade people. Don't listen to people, even if they're smart. Find your own way, because I've essentially created my own way to look at the markets. I've created my own way to visualize the data. And obviously, I'm probably not the only one in the world to do it this way, but it's my way. It's what I've come about after a year of over 40 hours a week of just trial and error and making mistakes and just being a bonehead. But you have to kind of find your own way. So once you do, I think things get a lot easier. And I'm getting to a point in the trading adventure where I feel, and I could be my mind could be playing tricks on me like the Ghetto Boys, but I really feel like I have confidence that the decisions I'm making and the place I'm putting my stops and the place where I'm putting my profit targets, they're solid. And if they're solid and you have confidence, it's going to take the emotion out of the trading. You're going to trade with way more precision because you're not going to be moving your stops. You're not going to be changing your mind because you see the market do something. At the end of the day, if the market wants to hit my stop and I made a bad decision, that's fine. Second down, let's try again. As long as you manage that risk, and especially your risk of ruin, man, just keep at it. Keep going, because it's 100% possible to be profitable in this game. If you just put the time, the effort, and the work, and you have your tools working for you. So thank you very much. Happy trading, y'all.